Hello, I'm Shane Vernier.
Hi, I'm Connor Woods.
And I'm Nick Quinn. We are the analyst team here at howtotrade.com, and together we're going to show you everything that you need to know about trading the butterfly pattern. So let's get started. A butterfly is a harmonic trend reversal pattern, and it's one of the more complicated chart patterns that traders might consider using. But ironically, that actually makes it more reliable, and it proves to be pretty accurate if you learn how to use it properly. It's very similar in principle to how a double bottom or a double top might work, and it helps traders spot reversals in trends. It's made up of 4 legs and has 2 distinct highs or lows depending on if the setup is bullish or bearish. So let's have a quick look at exactly how we'd go about identifying it. The butterfly is certainly one of the more complicated price action patterns that we have in technical analysis. It's going to take some time and some experience at getting used to how to use it. It's got 4 distinct components to it, 4 distinct price moves: X to A to B, B to C, and then C to D. We're looking for C to D. That is the move within the structure of the price that confirms the actual pattern itself. Now, you'd always be looking for point D to be below our X point here, which will be our final move to the high. Now that could be part of an overall trend structure, which I'll draw in there. And what you can see is that I've drawn this pink box around. Now what that represents is a basic Fibonacci tool. A lot of traders will use Fibonacci in conjunction with this type of structure to really confirm it and to get a good entry. Now I've put on here as an example the 50% retracement. Now that is not a Fibonacci number in itself, but it is a very popular way of marking halfway back of a particular overall distance in the market, and that is what gives it validity. As long as the D point is below that X, traders will be looking for D to tune in with any of those key Fibonacci numbers on the way back down. In this example, it's the 50%. From there, you'd be looking to get long the market, and your profit targets would usually be this point here at point B, or potentially maybe here at point C. It's going to take some practice to get used to using this, but if you do apply yourself and do put a decent amount of work into it, it can certainly be a very valuable addition to your trading arsenal. But that is the basic structure of how we'd go about identifying it.
So then let's have a look at an example on how we can actually use this butterfly pattern in trading. Now, to trade the butterfly extension pattern, it is important that we use a combination of the butterfly pattern and also a Fibonacci retracement level as the main trading strategy and tool for actually trading this. Now, first of all, we're going to look at the bullish butterfly pattern. And if I get my drawings up on the chart now, you can see these inflection points that we have. We have X to A, we have A to B, B to C, and C to D, and that really forms our butterfly pattern, and we're in this bullish trend as well. Now, if we're actually going to trade this level, what we need to do is we need to get that Fibonacci on there. So if we draw our Fibonacci from where the move actually begun, all the way from the beginning, so that's basically from this low we have here up towards this high, you can actually see that when we get to point D, we're pretty much testing this 50% of this Fibonacci retracement level, which is a fantastic opportunity to buy. So traders may have bought this market at the 50% or waited for a confirmation. Either way is fine. Let's have a look to see if we wait for a confirmation. So we have this test and then we snap back to the upside, and when we have this wick forming, that could be potentially where traders enter, with our stop loss sitting just below that 50%. And then we can see, depending on what our target was, if we was targeting new highs, and you can see that this trade actually yielded a nice 4.36 risk reward, which is a fantastic trading opportunity, and using Fibonacci and bullish butterfly pattern to do that. And now let's have a look at the bearish butterfly pattern. So the bearish butterfly chart pattern is exactly the same as the bullish one, of course, but obviously in the other direction. Now in this example on the chart, I'm going to show you how you can use the bearish butterfly pattern, which is formed at the end of a bullish trend, and it's a signal to us as traders that the market is potentially going to be reversing. Now once again, we want to use those Fibonacci retracement levels at the X to A line. So when I get these drawings back on the chart, you can see how, generally speaking, we're trending in a bullish trend up towards this point where we have X, and then we start to see some momentum shift. So when we draw on our bearish butterfly patterns, we've got our X to A, our A to B, our B to C, and C to D. Generally speaking, this bit are the shorter lines that the A to B to C. You can actually see that what happens after that bearish butterfly is the trend shifts to the downside. Now we can actually benefit from this as traders again by using the Fibonacci retracement. So if we draw the move from X to A, which is here, and move it along, you can see that when we get to point D, this is where we're in this sort of golden pocket scenario in the Fibonacci between that 61.8 and 78.6% level. So this is a fantastic opportunity to sell this market. How we do this potentially would be literally from a retest of this golden pocket scenario, or we want to wait for some sort of reaction in the market. So you can see that we did get a reaction in the market and we came back for the retest here. So on this retest would have been a fantastic selling opportunity with our stop loss just at where point D is, and then we can target new lows. So even if we just targeted those lows here, we yielded a fantastic 9.3 risk reward trade, and that's exactly how we can use that bearish butterfly pattern in trading.
Okay, here are a few of the key pros and cons of the butterfly pattern. On the pro side of the ledger, the butterfly is an accurate and reliable chart pattern, especially when combined with Fibonacci retracement levels. Compared to other chart patterns, the butterfly pattern provides a strong indication of pending trend reversal. And lastly, stop loss placement is clear and concise at the X level of the butterfly pattern. All right, on the con side, the butterfly pattern can often be mistaken with the double top and double bottom chart patterns. Now, the butterfly is relatively difficult to identify in the live market, so there is a bit of nuance and a bit of time needs to be taken when interpreting the butterfly pattern. Also, the butterfly requires knowledge of other technical analysis tools such as Fibonacci, moving averages, and RSI to trade the pattern astutely. Now, let's review some of the key takeaways from the butterfly pattern. Number one, the butterfly pattern is a chart pattern used to identify trend reversals and identify market entry points. Number two, although fairly complicated, the butterfly pattern is among the most reliable and accurate chart patterns in all of technical analysis. Number three, to find entry levels by using the harmonic butterfly pattern, it is best to draw Fibonacci retracement levels from the X peak to the A level. Lastly, when using butterfly patterns, a trader should enter a trade at point D. Now, if you want to learn more about the butterfly pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit the butterfly pattern into your own trading methodology. Then we'll demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience. And once you're ready, feel free to join our How to Trade Funded Trader program.